Remember, on this channel I told you guys I'm not going to only be teaching you guys how to make money in Forex, but I'm also here to show you guys the dark side of Forex trading and how you can keep yourself safe, and you're able to know what happens on the other side of Forex trading before you can be able to actually make money in Forex trading. So in line with that, today we're going to be talking about stop loss hunting. So have you ever heard of anything in Forex like stop loss hunting? So stop loss hunting is just a situation where some brokers like market makers can actually and deliberately manipulate the market on your behalf or against you to trigger your position before the market can normally go in your intended direction. So let me explain it this way. Have you ever placed a trade? Let me just say you buy, right? Let's just say we have something like this is your chart, all right? Let's just say this is your chart, and you buy somewhere. The market is bouncing on support and resistance. It's bouncing somewhere like this, and you have your support and resistance here, and you buy somewhere here. The market actually comes to the support, and you buy somewhere here, only for the market to then produce something, only the market to then go on your, only for the market to go on your behalf like this. Trigger your stop loss. Your stop loss is somewhere here. Trigger your stop loss, then go on your intended direction. So you see, you buy somewhere here, but the market goes against you first to trigger your stop loss, then automatically go on your intended direction. So before it goes on your intended direction, it must have gone against you to trigger your stop loss. Or maybe you're trading support and resistance, and when it gets to the resistance here, you sell somewhere here. You say you put your stop loss here and your take profit here, but the market first go against you, trigger your stop loss, then continue in your intended direction. So that is what we call stop loss hunting, because that is a deliberate action. It's done deliberately by most of the brokers, particularly the market makers, because they're able to make the quote and they can manipulate the prices. All right, so that is just the definition of stop loss hunting, because they're able to hunt your stop loss, just as the name goes, stop loss hunting. They're able to know where, they're able to know the majority of the places or the majority of the levels where most beginner Forex traders or the amateurs or the newbies, most newbies will put their stop losses. So they manipulate the market. They manipulate the market against you so that those stop losses can be triggered for you to get out of the trade. Because when the stop loss are triggered and you are out of the trade, the money which you've actually lose goes to them as their OTC gain. So it fattens their pocket, it fattens their bank accounts as their over-the-counter gains. So it's a deliberate action that they do to be able to to have over-the-counter gains. So with that being said, how can you avoid stop loss hunting? So SLH stands for stop loss hunting. So how can you avoid? Let's put this somewhere here. So how can you avoid stop loss hunting? The first thing you have to do, you have to be able to trade. They say trade support and resistance as a zone, not as a line. All right, trade support and resistance not as a zone, not as a line. I'm going to explain that to you in a matter of a minute. The second point that you have to do to be able to avoid stop loss hunting is give your trade room to breathe. Give your trade room to, this is very, very important. Give your trade room to breathe. Just like if I'm too close to you sometimes, if we're standing in a place where, in a claustrophobic environment, obviously you need to tell me, okay, please give some space, give me some space so that I can be able to breathe. It's the same thing in trading. You need to be able to give your trade some room to breathe. Your stop, the way you put your stop losses, the way you put your target can actually determine if you've actually given your trade room to breathe or not. And then the next point is learn how to push a stop loss. Learn proper stop loss placement. Learn proper stop loss placement. And the last and the most important point is use ECN brokers. All right, use only ECN brokers. If you want to avoid most of this, although with ECN brokers you might still have it in some cases, you might still have it in some limited cases, But in most cases, ECN brokers, most of their quote go directly into the banking system, and the broker doesn't have the ability to manipulate the prices. So the tendencies of stop loss huntings and stuff like that, they are limited when it comes to ECN brokers. So let's go to the first point. So the first point we have here is treat support and resistance as a zone, not as a line. All right, treat support and resistance as a zone, not as a line. All right, so let me explain that to you, how you can treat support and resistance as a zone. It should be a zone, not as a line, because when you're able to do this, it will avoid you a lot of problems when it comes to forex trading. Okay, so let's just take this chart for an example. This is the gold chart. This is the gold chart. So let me just look for a level where I can show you stop loss hunting and how you could avoid this if you were actually trading support and resistance as a zone, not as a line. So let's just look for this. Okay, even at this, there's a signal here. For those who trade gold, I'm already giving you a signal live. I'm giving you guys a signal live. This is for this particular market. If I have to minimize this, let me minimize this a little bit and I'll show you what I'm talking about. Let me just digress a little bit. I'm coming back to our point. Yeah, you can take this signal because it's something I've been monitoring for days. Last week we had NFP, right? We had NFP. Let me change this to red because let me change the color. So last week we had NFP, and this is NFP that pulled the market right down to this level. After the NFP, we've been trying to have some gains in the market, and the gains we had in the market, we've been having this breathe in, out, in, out, in, out. But now there was this support, this particular line, this particular resistance line that I've been monitoring for many weeks now. And the market break this line, I think, few days ago, because you can see this is the 4-hour time frame, right? So the market broke this line few days ago, and I was waiting for a break and retest. That's what I was waiting for. Break and retest, break and retest. That's the best way to trade. That's the best way you can trade breakout in forex. Break and retest. So the market actually broke this particular level. You can see, came here, broke this particular level, then it's coming. It has retest this particular zone. You can see this is the chart right here, right? Let me remove this so that you can see. You can see the market. Let me put it a very small line. Okay, so the market came, break this line. It came here, break this, then came, is retesting here. So the tendency, there are two scenarios. There are two scenarios here. It's either the market is going to continue here to retest this particular support. You can see there's a particular, the market is going to continue on this direction to retest this particular resistance. There's a particular resistance right here. And from here to here, this is a distance of plus 300 pips. So you can take this trade right here. You can take this trade right here with a stop loss of minus 150 pips. And a take profit of 300 pips. That's a risk to reward of about 1:2.5. All right, that is a risk to reward of about 1:2.5. So you can actually take this trade. This is a very nice trade, and I'll update you guys. If I take the trade, I'm going to be able to update you guys when we come in our subsequent videos. So this is a very, very nice signal. All right. So with that being said, let's go back to our analysis. So we're talking about how you can treat support and resistance as a zone, not as a line. Let me look for this key level. Good. Let's use this same support and resistance, because this is a key support and resistance. You can see right from the 8th of July. Right from the 8th of July, we've had this particular. Let me change the color. Right from the 8th of July, we've had this particular area, which is our support. We've had this as our resistance, our support, our resistance, our support, resistance, support, resistance. Then we came here again. It broke this particular NFP. This was NFP. All this one was NFP. All right, NFP, which was last Friday. So this was the NFP movement. This one that actually pushed the market down was the NFP movement, right? So after that NFP movement, we've come again to retest that same level, that that same support, we'll retest that same support. So this is an example of treating a line, a support and resistance as a zone, not as a line. See what would have happened if you were treating this particular resistance or this particular support line. If you were treating it as a line, let me show you what the market makers would have done to you. So let me remove this. So here we see the market has been bouncing here, support and resistance, bouncing here and here. And let's just assume you're somebody who trade support and resistance, right? So the market comes here, and if you pull back, you see that this level has been respected since March. So you came here and say, okay, I want to take my trade somewhere here. So you bought somewhere here. Let me just put you buy here. All right, you buy here, then you put your stop loss, because remember this is a 4-hour time frame. So this small wick alone is almost about 50 pips. So you were somebody who was very conservative. So you bought somewhere here. Then if you go on maybe a 1-hour time frame, you just put your stop loss maybe somewhere here, which is just going to be about negative 25 pips. It's just going to be about negative 25 pips, right? So you put your stop loss just somewhere there. But look at this wick. There's a wick here. And remember, this was our support line. Our support line is right here. It's right here. But the wick actually broke that support line. But now if you are treating support and resistance like a line, you see that, okay, the market broke this line. You just say, okay, the market broke this line and is heading again to the next resistance, and I need to put my stop loss just 25 pips. But see, the market broke this line, came again down for almost about 75 pips. And then see what happened. Immediately after that, what happened? The market went again in your intended direction. All right. Immediately after that, the market went, after this long week, which break the support and resistance, the market went again in your intended direction. So before, the market must have gone in this intended direction, it would have triggered your position. It would have triggered your stop loss, and you'll be out by negative 25 pips. You see, it must have triggered your stop loss, and by this point, you'll be out by negative 25 pips. So you see what I'm talking about. Let me use red. Maybe the color is not too visible. And that is the first example. But now that is the first example. Let me show you the second example. This is the second example here. This is the same resistance line, or this is the same support line. The market came here. Let's just assume again you buy somewhere here. You buy somewhere here, right? And your stop loss again is minus 25 pips. Very tight, minus 25 pips. The market makers already know that you'll be very conservative, you are very greedy, and you don't want to even give room for your trade to breathe. So they will just pull the market a little bit again. They will just pull the market down, trigger this minus 25 pips, you'll be out by negative 25 pips. Then see what happened after that. The market went again in your intended direction, and when and even your take profit was somewhere here. This one, your take profit was here. You see? So you see what happened. So even after that, the market still went in your intended direction. So you see, two trades, you would have lost two trades. The first trade was here. You were already out by minus 25 pips. You say, no, the market is against you. Your broker is wicked, this and that. Your broker is not wicked. It's just your lack of knowledge. All right? It's just your your lack of knowledge that makes you to lose trade like this. It's not your broker. Okay, because you have to know how to play also. If they want to play against you, you need to know the dynamics of the market and how you can play against them too. So this one, you can still prevent this. Look, let me show you how you can prevent this now. Let me wipe this out. Let me wipe this. Okay, good. So if I have to enlarge this, let's make it big, or let me just use the same one. So with this same example, if I go here and then we use this one as a zone. This is why I say treat support and resistance as a zone. As a zone, you need to know that the market, if the market is fluctuating, let's just say this is support and resistance. If the market is fluctuating here, all right? If the market comes here, there's ability for the market to fluctuate here before going up. If the market comes here, the market might still gain some few pips here, up and down before coming down. So the same things happen on all support and resistance, all right? The same thing happens on all supports and resistance. So when you have your support and resistance, you need to have another imaginary line, or you can even draw it out, which makes it a zone. So you can have another line which make it a zone, and you have another line here which makes it a zone. All right, with this has saved me a lot of money. This has saved me a lot of money, and it has also made me a lot of money at the same time. Here we have our zone, we have our zone, we have our zone, we have our zone, we have our zone. So even if the market comes here and just break this particular resistance a little bit, and I say somewhere here, I wouldn't just put my stop loss here. I'll understand that this is a zone. All of this is a zone, right? So I'll understand that this is a zone. Let me make it. This is a zone and this is a zone. So until this zone is violated before I can say, okay, the market has broken either my support or my resistance. So even if the market comes here and I say my stop loss will only go somewhere here, this is where my stop loss will go. And this is where my take profit now will be here. So that even if the market makers have to pull up the market, it will still be within this range. It will still be within the zone. If I come down here, even if the market makers have to pull down the market to trigger all the newbies, all the people just join, they know where you guys are going to place it. So even if they have to pull it down and they do this, I'll still be in the trade. My stop loss is somewhere here. At the same time, I've given my trade room to breathe, and I've also treated support and resistance like a zone. So I'm explaining 2 points here. I'm explaining 2 points at the same time. 1 point, I've given my trade room to breathe. The trade is able to breathe up and down without hitting my stop loss. So I've given my trade room to breathe. And the second point, I have treated support and resistance as a zone, as this zone, not just as this small line. So support and resistance is a zone, not as a line. Treat support and resistance as a zone, not as a line. I can't emphasize this enough. If you can understand just this on this video alone, it's going to save you a lot of money and it's going to make you a lot of money. All right. So this was just like the example I'm making. So in real life on this chart, you can see if you were trading support and resistance as a zone, you will see that here, your stop loss will only come down somewhere here. Not just here, because if you go on a 1 hour time frame, this will be a whole trend on its own. But you won't just put your stop loss maybe minus 25 pips here. You give your trade room to breathe, and your stop loss will always be coming somewhere here. The same thing goes here, because see, this was another pull. This week again was another pull. With this week, they triggered many people out of the market. Many people were triggered out of the market just because of this week that break the support and resistance.